to the strongest market in the world, the US market. Expense ratio, only 0.03%, means you keep more of your profits. Dividend payouts. You also earn regular income from dividends. Reinvest them for even faster growth. Risk level, medium, but super stable because of top-tier companies. Real-world example. If you had invested $10,000 in VOO 10 years ago and just left it alone, today you'd be sitting on over $31,000 plus. And that's with zero stress, zero stock picking, and zero guesswork. VOO is like the foundation of a solid financial house. If you're serious about building wealth, this is where you begin. Period. Now this one is for those who want speed. Not just growth, but aggressive growth. Say hello to Invesco QQQ ETF, one of the most powerful tech-focused ETFs in the world. Why QQQ is a game changer? QQ tracks the NASDAQ 100 index, which means it holds the 100 largest non-financial companies listed on NASDAQ. You're getting direct exposure to tech giants like Apple, Microsoft, Amazon, Nvidia, Meta, Google, and many more. This ETF is built for high-performance, tech-driven growth, and it has outperformed many traditional investments over the past decade. Massive performance. Over the last 10 years, QQ has delivered an average annual return of 14 to 16%, sometimes even more depending on the tech cycle. This kind of return can double or triple your investment in less than 7 to 10 years with compounding. Who should invest? Investors who are comfortable with a bit more risk in exchange for higher potential returns. Perfect for young professionals,